crypto has run its victory lap. Okay, let me give you all some stats on what's been happening with the wins over the year. Crypto's bull run, Bitcoin broke the 100,000 threshold. That was a psychological win and also a profit win. In 1 year ago, January 10th, it's been since spot Bitcoin ETFs were approved by the SEC. Institutional adoption on the rise. Crypto bull run, spot Bitcoin ETFs. Number 3, the number of pro-crypto in Congress. 59 seats in the Senate and 289 in the House. We have President Trump's executive order on digital assets. Directs federal regulators to build frameworks for digital assets, among others, other roles in that EO. We also have the SEC rescinded SAB 121, lifting guidance effectively prohibiting banks from taking custody of digital assets for customers since March 2022. Translation, crypto can now be banked. And 1 in 5 Americans have invested in, traded, and used crypto, and this is climbing. So I want to talk about, with all this good news, beyond the headlines, can you all talk about the opportunities that this moment presents with all of these wins? What is possible? Nathan, I want to start with you. Anchorage Digital, asset management for institutions. What does this moment mean for the industry?
Sure. So I think the overall sentiment is somewhere between electric and euphoric on kind of what the future holds for digital assets. I think we're seeing a bunch of really interesting trends start to happen. First one I might mention is SAB 121 repeal. This is a huge setback when it was rolled out a couple years ago that basically effectively prevented any banks from being able to come into the digital asset ecosystem. For those who don't know, Anchorage is actually the first digital asset bank. We're overseen by the OCC, Department of the Treasury oversees us, and so we actually operate as a national bank, but SAB 121 effectively gave us a monopoly on that for the last few years. Which was wonderful for our business, but actually bad for the whole industry. And so now what you're going to see is more and more of the Wall Street banks want to come in, and they're going to be faced with a big question. Do they partner with some of the existing crypto custodians to bring these products to market? And I think many of them are going to be able to do that and launch new offerings within the next couple of quarters. Or do they try to go off and build it by themselves, which will take years, and they will eventually succeed there. Some have. But I think that's a big one to look at. The other one I think to pay very close attention to is the Bitcoin strategic reserves. President Trump has proposed this as a potential research area for the Crypto Council to look into. But even the mere idea of that is becoming a little bit of a self-fulfilling prophecy, where we're seeing other sovereign wealth funds start to look at that, and other states within the United States start to look at it. Interesting anecdote on that is that many of the sovereign wealth funds that look into it think of it basically the same way that Trump thinks about Greenland, which is this is core infrastructure that we need to own. And so thinking of Bitcoin almost as real estate that needs to be owned in order to make sure that your nation is able to compete and win in the next century. So very interesting trends, and I think it's just the beginning of what we're going to see.
Steve Kurz, Galaxy. We were here last year talking crypto, like what a difference a year makes. What moment are we in?
Well, on some level, no matter what the year is, crypto always takes oxygen in the room, and I think it's never been important for everyone in this room, but really everyone, to ignore the headlines. I think that the headlines, you're going to see more about meme coins and AI meme coins and Trump coin, and that's fine. But I think underneath the hood, the moment that we're in for crypto is important, and it's never happened in crypto's history. I think we're at the beginning of an asset management revolution in crypto. 5 years ago, it was a $25 billion industry in terms of a couple of private funds and venture funds. 2 years ago, it was maybe 70 billion. Today, it's well over 100 billion with the ETFs. We've had 35 plus filings for net new ETFs in all kinds of new strategies since the election, more than 15 this year. There are now over 300 securities through which you can express the crypto theme. That's the raw material for active management. That's the raw material for hedge funds. That's the raw material for crypto integrating and being packaged in a way that allocators can actually engage with it. the product market fit of crypto to allocator portfolios has always been a moving target. You could put a venture fund in, maybe some Bitcoin, but everything in between has been very, very difficult to invest in institutionally. That's changing in real time. We've got a $6 billion asset management business. We're launching hedge funds and active strategies. That's going to really bring people into the fold, lower volatility, add diversification. So I think that's what's not being talked about enough underneath the hood of all the noise.
Great. Dave LaValle, Grayscale, and thank you for being on the Milken Institute FinTech Advisory Council. Appreciate all of your work with us at the Institute.
We appreciate your work.
Thank you. I'd love for you to give us the state of the state, and also just thank you for being a pioneer in the ETFs. I mean, taking on the SEC and making this happen. So can you talk about the moment that we're in?
Yeah, I think there's a couple of things I would say. The first thing I would say is the opportunity for regulatory clarity, and that regulatory clarity will set the guidelines and the roadmap to be able to for every segment of the market, whether it's an asset manager or a custodian or other members of the trading community, to be able to have a good set of rules that they will know how they can kind of be permitted to kind of engage in the marketplace. I think secondarily, there's also an institutional awareness that's at a different level than it has ever been. I think Steve made mention of it. When we launched the Bitcoin ETF, what ultimately happened is there was an absolute switch in risk for the advised market. And I'll take this advised market for a moment, and then I'm going to make an analogy to the institutional market. So advisors had asymmetric risk if they were going to tell their clients to allocate to Bitcoin or digital assets, and overnight, that asymmetric risk inverted. And now they had asymmetric risk if they didn't have a strategy around digital assets. What we're seeing, and that was like right in front of our face, because we saw the panic in the advisors' face, and it's 80 trillion of wealth that's transferring that they needed to pay attention to. The same exact thing is happening in institutions now. So we're having conversations with large-scale banks, and historically, it was like a hands-off kind of attitude towards it, whether it was how we're going to engage with the Bitcoin ETF or how we're going to engage with our institutional clients. And those that were willing to push the risk spectrum and take advantage of the opportunity won and have a head start. Now everyone else is catching up because that asymmetric risk that I just explained for the advised market is now flipping in the institutions. And so with some regulatory clarity and institutional adoption in a real way, we think that it's going to be quite bullish for the entire industry.
Great. Dr. Beck, I mean, you have been cited in the Bitcoin Satoshi white paper. I mean, that's rare. We're having a rare air moment here. So you invented Hashcash, and you've been focusing on proof of work algorithms. I want to just get a sense from you. What moment are we in? You're a cryptographer. You're a trader. I mean, you have such an extensive knowledge base in this space. Can you give us your take?
Yeah, I mean, I think the things that were mentioned with the SAB 121 repeal and the prospects now for the SEC to have marching orders to provide regulatory clarity are going to be very helpful. More parties entering the service of crypto assets, the banks is all good. And the introduction of the spot ETFs changed the tone as well. So I think it's now, I mean, people have been talking about institutional investment in Bitcoin, but to date, I'd say that's been very small. So I think now the gates are open for there to actually be some meaningful institutional investment. And so at Blockstream, we acquired a hedge fund in 2021. We had a few structured products actually on the mining side, which are kind of more esoteric instruments. But now we've come back to the market, made a strategic investment in Kamenu, which is an institutional custodian internationally. And we're also bringing to market institutional targeted low-risk funds around Bitcoin and US dollar yield.
So, there's a lot of cheerleaders for crypto, but there's also a lot of cynics and skeptics that think that this is something that is not going to thrive and to continue as is. I'd love for you to share, each of you to share your case for crypto. Why should people get off the fence and join in this asset class? And then also just dig a little deeper into what kinds of due diligence questions your clients or those your potential clients are asking as they're increasing their investments in the space. Maybe I'll start with you, Steve.
Yeah, sure. I mean, look, everything we've said for 7 years, this is generational and global. And so you kind of roll your eyes. But if you look at why crypto hasn't gone away, it's because it's generational and global. And so if you look at the adoption curves, if you look at what's happened without regulation in the U.S. And in spite of the kitchen sink really having been thrown first at Bitcoin, but then at the industry. There's a reason that the industry has shown resilience. There's a reason that the industry is here. I think the hardest part for anyone who's skeptical is to, I mean, aside from the psychology of being skeptical and being wrong on certain things, is to just explain that just because there are bad things or because it's imperfect or there are bad actors, that there aren't also positive things that should be paid attention to. So I think this is a level setting moment. I think that you should start with a blank sheet of paper. If you have a view about Bitcoin that's negative, we can argue about Bitcoin. If you have a view about Ethereum, we can argue about Ethereum. But first principles, take a stable coin. This is a 5 to 10x faster and 5 to 10x cheaper way to move money around. Whether that reaches 500 billion or a trillion this year or next year, we can debate, but it's not going to be anything other than a much bigger part of the payments infrastructure in the world. That's going to happen. The tokenized wrapper, and Dave can talk about this eloquently as an ETF guy, is going to replace ETFs, whether it's 5 years, 2 years, or 10 years. So you just need to start there, and everything else follows naturally. We don't support everything in crypto. Everyone on this panel doesn't support everything in crypto. There are now 4 or 5 provable areas that crypto has shown its ability to withstand a lot and to grow, and now the regulations will bring scale to those ideas, and you should really ignore that at your own peril.
David, make the case.
Yeah, I would say that thinking about it as a digital currency alone, I'll just take Bitcoin, is a poor way to take a look at it, especially in the US market. And so the way that I have kind of cracked the nut with the cynics that I've talked to is to talk about the disruptive technologies that I've experienced and that we have experienced in our life. The first would be the internet, the second would be a smartphone, and the third, I would make the case as an ETF. And so along every one of those kind of adoption curves, there's been tremendous amount of unknown information about this disruptive technology and a lack of willingness to embrace it. I'm about the oldest guy at my firm. All the young men and women that I work with, it's so obvious to them that digital assets are going to change the way we do everything. And I've been willing to embrace that. I was an early ETF guy and faced off against the mutual fund industry more generally and institutional allocators that essentially thought that ETFs were financial weapons of mass destruction. We're about 15 years into digital assets, and we're right at that point where 15 years into ETFs where everyone was like, wait a minute, these things are cheaper, more efficient, more transparent, more tax efficient. Maybe we should pay attention to them. So I think we're at that inflection point now where it's too big and too obvious to everybody around the cynics that there's something here we need to pay attention to. Last point, in the case of a smartphone, when I got my smartphone, I was so thrilled to not have to carry my MP3 player and a phone. That was genius. I didn't complain that I couldn't get a taxi out in front of my home and dismiss the smartphone. We don't even know what the application is going to be that's really going to be transformative, and that's something that we're really, really excited about too.
Dr. Back, make the case.
Well, I think if you search on YouTube for the first financial news discussions about Bitcoin, probably 2012 with Trace Mayer, who's an early Bitcoin advocate. And at that time, the conversation was very skeptical. What's this funny internet money kind of conversation? And I think over time, the conversation has flipped so that now people are more apologetic to say, well, I don't understand it. Can you, the guest, explain it? I should understand it. So it's kind of changed. And of course, the spot ETFs moved the conversation forward another step. And now we have Larry Fink, talking about use cases for Bitcoin as a hedge for geopolitical uncertainty and as a hard asset. So I think the conversation has already changed to a large extent. And what's missing now is the financialization of the asset. So a lot of Bitcoin is parked in simple custody storage, where there is a large opportunity in structured products around that, and the financialization of it, the use of it as a collateral for lending, for hedging and de-risking and carving off different types of financial instruments around it to complete that picture. So I think now is a good time for that to kick in really and to start to see. So it's still early, I would say, because it's so far been a passive asset class. The volatility, of course, is, I think, inherent to the rapid adoption curve, but eventually it will reach saturation and then presumably more like gold-like volatility.
Nathan, how do you prepare people to invest?
So I think the decentralized ecosystem, broadly speaking, blockchain that we're looking at here, it started out as a financial asset, and we saw this with Bitcoin. Bitcoin was attempting to be peer-to-peer cash. And so there's a natural affinity towards all of the financial type products. Of course, that's what many of us here in this room care about because we're thinking about this as an investment asset. But I think the very profound thing that was proven with Bitcoin is that you could build a decentralized network that could do useful stuff that was actually able to be trusted by everyone on Earth. Right now, we're engaged in a very interesting debate about who and how TikTok should be owned. And so I think these two things eventually come together where we have a decentralized asset like Bitcoin that can be trusted by everybody. And we're going to build a bunch of things within the financial services industry, whether it's ETFs, whether it's bringing traditional assets onto blockchains. But that's just the beginning. Eventually, this moves into general purpose computing, general purpose software. And so we might one day be able to conceive of something like a decentralized TikTok that everybody could trust. Because it was unowned by anyone in particular in the same way that Bitcoin is. And so I think that's where things end up long term, is that we actually have trusted infrastructure that can act as global public utilities for the entire globe. And so when we're talking about that kind of a transformation, we're still in the super, super early phases, and there's a lot of growth yet to come.
And Nicole, if I could add one anecdote, I was getting a nightcap with my wife at a hotel bar around here. In case the people who I'm talking about are in the room, apologies, I won't mention names. And we were sitting there, and there were two people, and I promise I was paying attention to my wife, but there were two people who were talking about crypto, and it was a 20-minute conversation, and they were clearly skeptics. And one was talking to the other, and it started with Trump coin, and then Trump coin was on the Solana chain, and then what's the Solana chain, and what does that mean for the broader ecosystem? And then it went into meme AI coins, and then it came back to Bitcoin and Ethereum. And at the end, they sort of laughed and said, but you can't ignore it, you have to do something with it. I haven't heard a conversation like that. I mean, the knowledge base to be able to go in depth on all of those different crypto topics, the skepticism, but sort of acceptance that it's here and now what do you do with it? And then the conclusion that, okay, like we can't ignore this anymore. It's one conversation. I haven't heard that level of dialogue from two skeptics in 7 years of doing this.
Yeah, and I think it's a good pivot to the second part of your question, Nicole, talking about kind of institutional mandates and what we're seeing from diligence conversations.
Yeah.
It's very similar to early day ETFs when you have an institution come in and their arms are a little bit folded and they've got 15 minutes to talk about ETFs and 45 minutes later I remind them, I knew you had 15 minutes, but can we still go? And the conversations that we're having right now is a tremendous amount of skepticism about the way that they're looking at a crypto asset manager in our case. And when they start to peel back the onion, it's, oh wow, you guys have a regulated RIA, you're a regulated broker-dealer, you have compliance program. You guys have policies and procedures. You have, governance. Look at, and I think over time the questions are exhaustive at times from institutions, but we welcome that because we want to make sure that they have the same level of confidence in investing in the products that we're bringing to market as they do in every other asset class. Now, I can't say that every actor in crypto has that same level of kind of institutional appetite or has the opportunity to address those diligence questions in the same way. But I think that those questions are coming. The bar is going to be set as high as the bar can possibly be set. Those that can meet that bar are going to win with institutional mandates. But to Steve's point, they recognize it can't be ignored any longer.
And this isn't T0. The ODD work has been done.
Right.
Like, and to give a plug to Allborn,
Right.
they've been doing this work for 7 years.
Right.
So it's similar to the conversation I just described at the bar. Like
It's exactly
we're not
right.
starting at zero. We're starting at when you go call your consultant or you call a bank platform, they have people who have worked on this for a long time. That's a very important embedded coiled spring around the adoption curve of dollars coming in over the next couple of years.
I want each of you to give the crypto industry a score or grade. And I also want you all to let us know, how does crypto get a higher grade from the grade you give it? So maybe Nathan, start with you.
So counterintuitive here. I think with what we've been through in the last 4 years, I would give us an A+. The amount of attacks on the industry that we withstood and have come out on top. So that's my view. I'm very bullish on this industry. I think we've done an incredible job continuing to build despite an array of challenges, skeptics at the highest level. And so that's where I'll start, A+.
Wait, how does it get extra credit? Like, do AI give us extra credit? Like, how do we get the A+ times
So now the question becomes, how do we get graded when there are not barriers against us? And so I think the core question to ask is, can we actually reform the financial system? Can we actually show the use cases? And so we're entering the moment right now where all of the potential that we've been talking about for the last 4 years will now be weighed and measured. Are we actually able to meet that? And so now is the time where we actually have a fair grading system upon us.
Dr. Back, what grade are you giving the industry?
Well, I would break it down by the Bitcoin network and other networks. So I'd say the Bitcoin network is, has a much longer track record just in elapsed time. So the Lindy effect of being in market, having no downtime, having no security issues on the core network, and then infrastructure around that, which, admittedly, if you've been around for a long time, in the early days was not institutional grade, but has improved over the years. And unfortunately, going back a few years, there were a number of failures in sort of early stage crypto hedge funds, which were not institutionally managed. So I think, the core protocol, Bitcoin, the asset class, very steadfast, here to stay. And the institutional management of that is coming in. So, licensed custodians with appropriate licensing for institutional investors. Blockstream brought across some fund managers with an institutional background in pension funds. So, some of the players on the stage have been in this space for a long time and have licenses and so forth. So I think things are becoming more institutional, more licensed, more professional, and that's a good thing because some of the excesses of a few years ago in the sort of DeFi and altcoin space, frankly, gave the asset class a bad name, which I think Bitcoin itself never deserved, right?
Steve.
I'll give us, in the arc of the last 5 to 10 years, I'll give us a B-, as an overall industry. And I think, there's a couple reasons for that. One, the obvious failures, of FTX and otherwise are self-evident. We don't need to talk about that. I think we haven't done a great job of articulating why this technology matters in different cases. I think 5, 6, 7 years ago, and even a couple of years ago, if you went to DC, everyone would be going with a different idea. Well, it could be this, it could be that. And the reality was at that time, crypto really needed to be described as a back-end technology. And there will be front-end applications of crypto, to his point earlier, but first you got to do this, then you do that, and then you have the big picture win. So I think we've had a communication problem, we've had a bad actor problem. That said, I do think those that have made it to the other side, Galaxy is a 550-person company. We're proud to have led the FTX bankruptcy wind down, so we returned $8 billion back to creditors last year. Cleaning up the mess, operating with licenses, doing it the right way. That's probably not a B-, but if you blended it together, and if I'm honest with myself, I think the overall industry could have done a better job. And the more important test is, it's a harder curve now for a lot of different reasons. We've got to really redouble our efforts and dial it in for the next few years.
Dave, what grade do you get given?
So I'm going to focus, as the ETF guy up here, I'm going to focus on the ETF industry. I think the Bitcoin ETFs coming to market were a massive inflection point for the entire crypto industry. We got a ton of tailwinds now with a change in administration. But I would say that everyone rushed to talk about how euphoric the inflows were, and that was absolutely fantastic, something we had never seen in the ETF industry and kind of outpaced anything anyone would have ever imagined or modeled. But what I would say is behind that, everybody had to show up. Exchanges had to show up. Liquidity providers had to show up. Market makers, APs, custodian banks, the asset managers, every trading firm. And there were, 10 ETFs that came to market at the same time. If the small one failed, we all failed. And so the industry showed up, and I would give them an absolute A+. What I can say is that there are firms up here, Anchorage, Galaxy, Grayscale, large-scale firms, been dedicated to this space for a very long time, operating with an incredibly high level of integrity, working our tails off, fully committed. Bitcoin 100,000, Bitcoin 17,000, fully committed to pushing the industry forward. The issue that sometimes happens is a small player in the market has the same voice, and if they behave poorly, and has the opportunity to have an outsized impact on the industry, and that's something that we pay very close attention to. But I think the industry, especially the ETF industry, an A+ for sure.
So the industry is impacted by advanced technologies. I just want Nathan to talk a little bit about the AI effect. We're talking about DeepSeek and how that could impact the industry at all, or even. Can you share your take on that?
Yeah, I think there's a couple of interesting things that are happening with AI. I think the first one that's maybe not been talked about as much as I would have liked is the the fact that AI might actually be a competitor for compute against Bitcoin mining. And so many of the Bitcoin miners consume energy resources in order to mine Bitcoin, and many of those might actually, infrastructure that have been built for Bitcoin mining over the past several years might be pivoted over to AI compute. And so there might be an interesting effect there on like, is as much mining capacity available if all of that compute is consumed by either training models or then the inference models that need to in order to run those. So I think that's going to be an interesting trend to track and then see exactly what happens there. And then kind of thinking about AI at the application layer. AI in many ways is a centralizing force where those with the capacity and skill and talent to train models end up with a lot of the centralized power in a way that we may decide is not good for society in meaningful ways. And so how are we able to take the incredible utility of the AI models, mix those with the decentralizing power of blockchain, and maybe come with what I hope to be a better overall solution for society than what I would say is the naive assumption that this will be a default centralization of power into a few entities that we may decide is not good. And so I'm really hopeful to see some progress happen in that area. There's a lot of experimentation going on in the AI x crypto space. And so it's an interesting one to track and see where it goes.
To make it very practical, that's an example in a hedge fund that doesn't have to access crypto coins. There's a long-short application of miners that have the goods in terms of their facilities that can become AI HPC data center facilities and those that cannot. And that's a trend that you can express through a fund that you can invest in. We manage funds like that, and we also have a Bitcoin miner that, at risk of being heretics on this stage, we're exploring that AI transition.
Everybody will.
Yeah.
And Dr. Beck, the quantum effect, I mean, quantum hype or quantum reality, what's happening here?
Well, I share the view of the NVIDIA CEO that it's still actually a couple of decades out, at least. And so while it's worth keeping an eye on the progress is actually extremely early stage for kind of cryptographically relevant quantum computing. What we have today are kind of the equivalent of 1970s a few tens of transistors on a test board or something, in fact.
Well, you all have heard it here. Crypto is an asset class to watch, invest in, trade in, and also continue to develop as an industry. So I want to thank everybody for joining us and these experts in the space for having this conversation. Thank you. Thank you.
Thank you.